But it's not so easy to sell a home quickly in today's market. And there's also the uncertainty of tenure in one's twilight years. Now, we have reverse mortgages here in Malaysia, but they are a very expensive option due to hefty transaction expenses levied onto the borrower. Now, however, many seniors, especially in the M40 category, own their homes, but they are unable to tap into this enormous store of wealth as long as they live in it, making them asset-rich, cash-poor. Now, with successful global case studies across Singapore, across Australia, and even France to reference from, could one be adapted for Malaysia's needs to help seniors unlock home equity for cash? We believe so, and we're drawn to the French viager, a centuries-old model of peer-to-peer financing between willing buyers and willing sellers. Buyers are typically middle-aged seniors, middle-aged investors seeking a future space for their retirement, and sellers are older residents seeking more liquidity without having to move. They sell their home equity in return for a lump sum payout and lifetime annuities, whilst aging in place and not having to move at all. And when they pass on, the buyers receive the home, which could be in 15 years' time on average, and possibly longer. Now, what's happened in recent years is that institutional funds have entered the market, drawn by the attractive returns, and they bring with them an added feature where longevity risks are mutualized at portfolio level. Now, it's these features that have shaped CALSIS as a reverse annuity scheme for Malaysia. So let me explain how CALSIS works. We have a fictional senior, Sabrina, who has been diagnosed with cancer and needs 150,000 ringgit urgently for her treatments. Now, after discussing the available options with family, she and her husband conclude that, yes, it's better to take up CALSIS. And under CALSIS, the eligibility is 60 years old and over, owner-occupier of a fully paid freehold and landed home in Klang Valley, and is a past or current cancer patient. They sell their home to CALSIS at a market value of 1.5 million. Now, we call this the entry value, and it's determined independently by our appointed valuers, and a copy of the appraisal is shared with the applicants for transparency. Now, upon transfer of title and ownership of the home, they will receive an immediate lump sum of 150,000 ringgit, equivalent to the 10% of the entry value. Now, this finances your acute major expenditure, which what Dr. Murali has mentioned. But from year 2 onwards, they receive lifetime annuities between 3.3 to 4% of entry value, depending on the age of the youngest participant. Now, this would then therefore finance the chronic major expenditures. And at the same time, Sabrina and husband may nominate an individual to receive a part of the sale proceeds if she and her husband were both to pass on earlier than 10 years and the home is sold. So the scheme ends when both Sabrina and her husband pass on. And at that point, we invite the nominated individual to access the home to retrieve sentimental items whilst the home is being sold in order to return capital back to the institutional investors participating in the scheme. Now, if they pass on earlier than 10 years, right, the nominated individual will receive a lump sum calculated as a percentage of the entry value. Now, what Dr. Murali doesn't know, and I'm going to announce it today, is that in our scheme documents, we now provision for the participants to not only distribute 100% of the apportioned proceeds back to the individual, but perhaps a portion of it, say 80% of it, back to the nominated individual. 20% goes to approved civil society organizations that look into cancer, like NCCM. So we really embedded that into our scheme documents. So this means that if you look at the figures, even like 20% of a 1.5 million ringgit home and carve out 50% of that for civil society organizations that look at cancer, that's an enormous pool of capital that will be coming your way, that will enable services for many more that we could not have served. So that's our commitment to NCCM and other civil service organizations that we will unveil in the future. Now, so what it is that via CALSIS, what it means is that via CALSIS, participants are funded through their lifetimes from the unlocked wealth of the home and enjoy complementary services at the same time. Let me make sure my slides aren't good. Yeah. And when one participant passes on, it doesn't matter, because as long as if you have a husband or a spouse, all the scheme benefits go to the surviving partner until they pass away. So they always have a roof over their head. They still receive lifetime payouts, so they continue on until they pass on. So the scheme ends when both parties have passed on. That's the distinction we're making here, to ensure not only the cancer not even the cancer patient survives this, but also their caregiver. So we built CALSIS with Kenage Investors Berhad to sit at the confluence of healthcare financing, capital markets, and impact investing, to tap into Malaysia's capital markets worth 4.2 trillion ringgit in 2024. Now, this is a very powerful instrument, because imagine just 0.1% of that is 4.2 billion. So imagine the scheme's potential in addressing the needs of Malaysia's aging population. More importantly, all of the scheme's fees and operating expenses are paid for by institutional investors. This was designed intentionally so not to burden our participants who are going through financially and physically difficult times. Every year, we issue a capital call from our investors to fund payouts for our participants, including our fees and operating expenses. And payouts are always called 1 year in advance, and placed in the fund to ensure scheme stability. And this is at the core of CALSIS, where we balance the need for commercial returns from our institutional investors whilst meeting the financing needs of patients battling cancer. Now, I think this is very important, because whilst CALSIS today can mitigate much of today's costs of cancer treatment, especially when paired with patient access programs, we recognize the future of oncology care promises transformative outcomes and turning a terminal prognosis into a near chronic condition, but it comes at staggering costs. And we understand why that's so. And it's for that reason that we're looking at how to help eligible participants to tap into future payouts in advance to fund high-cost, cutting-edge, innovative treatments that can deliver meaningful outcomes. We also recognize that in order to close the care gap, like what Dr. Morales shared in the cancer care continuum, we have to shift the way we finance cancer care with a view towards early detection to dampen the economic and physiological impact of cancer. It means that one day, CALSIS could extend towards serving healthy seniors to fund retirement expenses, proactive health screening to CALSIS protocols, and medical insurance for when it's needed as a holistic package. To end off, CALSIS is more than just a world-first innovation that taps into capital markets to fund cancer care and retirement for our aging population. It's a movement. It's a vision to reimagine how Malaysians can invest not only for their future, but in each other. In time, CALSIS will open its doors to everyday Malaysians, that's you all in the crowd, enabling you to grow your retirement savings with returns above EPF dividend rates, whilst directly supporting seniors facing life's harshest battles. Because we believe in a more inclusive, compassionate Malaysia, one where our shared progress is powered by shared purpose, where no one is left behind. Let us take you into the heart of this journey through the story of one of our earliest participants and the impact Kelsey's has had on their lives.
Hi, I'm Christina. I was formerly an accountant and now I'm retired.
Hi, I'm Nan. I used to be in the satellite industry and I retired from there 4 years ago.
We met at a warung kopi. He came in to order something that was not on the menu. So I had to tell him it was not available, and that's how we started chatting. We were married in 1999, so it's 25 years.
25 years, yeah.
We celebrated our silver anniversary, even though I was sick. Took me out to dinner and I was in a wheelchair, so when people see you in a wheelchair, they sort of like shy away and they don't approach you. We traveled a lot prior to my diagnosis. One of our favorite places to travel to was Europe. I remember celebrating my 50th birthday in Madrid on a rooftop in summer. It was so hot, but of course we had a lot of friends and food and drinks, and it went on all night until midnight. My cancer was diagnosed in early September 2022, and it was because of a lump that was growing around my neck area. So I went to an ENT surgeon, and the results was Hodgkin's lymphoma, stage 2. I was very shocked at first. Then he said it was curable with the right treatments, but that meant a long battle ahead. You don't just need the physical strength, you also need your mental strength, something of a spiritual nature as well.
She's got a very strong fighting spirit, always very positive.
Nan has been my pillar of strength. Every time I look at him, I know that's the reason I'm still alive.
Just before my retirement, I was about to procure insurance for Christina. Before I could sign on the dotted line, somehow her illness came first, so she's uninsured until now. Yeah. So I funded from my own savings and EPF, and all in all, until now, it's closer to $1 million probably.
At first, when I heard about Kelsey's scheme, I was very excited.
And I read all the documents. I found it to be a very good scheme in terms of providing a quick financial solution.
With the Kelsey scheme, you have an asset that you can monetize. After selling your home to Kelsey's, you will still have a roof over your head because they allow you to stay there and they will pay you annually or monthly.
Kelsey's has just come in at the opportune time. They can provide a hassle-free solution.
I feel that I have a brighter future now because knowing that I don't have to worry about where the money is going to come from to pay my hospital bills, I can think of visiting my parents and hopefully travel again, start back to a normal life.
Wow, thank you, Mr. Jonathan, for that sharing, telling us to actually see how we can actually turn what we have into something that we could use to finance our health. And so just a gentle reminder to everybody, just to turn your phone on silent so the session will not be interrupted. So continuing with our case study series, we now turn a perspective shaped by over 2 decades of global experience and a strong commitment to patient access. Please join me in welcoming Mr. Alexia, who brings with him a deep expertise in multinational healthcare and manufacturing sectors and has been dedicated to crafting financial solutions for patients since 2010. And so he'll be sharing valuable insight into the evolution of commercial health insurance in China, its impact on career and cancer patients, and what we can learn from that journey. So let's once again give a warm applause to Mr. Alex.
Thank you, Dr. Ann. Actually, as soon as I got the invitation from National Cancer Society, I was wondering, okay, what can I introduce to you guys? Actually, moving to back, I think the last decade, health insurance, what happened in health insurance in China was so interesting, even so strange. So I want to deliver that case to you to introduce. So 3 major models today I'm going to introduce to you. But the first 2, like what is healthcare structure in China, and the second, the gap between social insurance and the out-of-pocket payment for treatment is, I will go through it within 5 minutes. Then I will pay more time to introduce what happened to the health insurance industry in past decade in China. Okay, you don't need to remember it. You can take picture of it. So for the past 30 years, the health structure in China, healthcare structure changed a lot. So from private insurance, social insurance now to, you can see, the supplementary medical insurance, private insurance, the social insurance, and the medical charity assistance program. But it's different than Malaysia, is that you can see in China, the social insurance split to 2 major groups. The first one is like basic medical insurance for urban employee like myself, right? So I pay 2% of my monthly salary into the account, which is my personal account. And the employer of mine pay 6 to 10% to the public funding. And basic medical insurance for urban residents and the rural residents is for retired, for kids, for the students. They need to pay how much is it? $50 in cash every year. The government will subsidy another 80 to them. But the majority of the funding, you can see, was from the employer paid part to support the residents part. That caused a problem. Aging population growth. That means the funding is very shorter and shorter for the residents, like my parents, like my kid, right? So that's the problem you can see now. The balance of social insurance, income, revenue and expenditure is getting tighter and tight. That's the major problem now in China. We can see even in next 20 to 30 years, the situation will become worse and worse because one-child policy, right? So, and the second part you can see is the out-of-pocket burden of cancer treatment, not only cancer, but also others. So I have some data here that about 60% of total cancer patients need to sell their assets or need to get a loan from somewhere to treat cancers. For lung cancer, if only need a surgery or chemotherapy, you can see out-of-pocket burden is around 30. But if you need, pembrolizumab, you need to pay out 70% out of pocket for it. For breast cancer, it's around 40 to 60% of the out-of-pocket payment. That costs like $500,000 for it. That causes a problem. Dr. Mahari introduced. It's a socialism country, a communism country. The government supposed to bear all of those costs. But now, people need to pay out of pocket. Then, social media now getting more and more popular. You can see back to 10 years ago, 80 years ago, you can see every day on social media. My dad diagnosed with lung cancer. I need to sell my house to treat my dad. My wife just diagnosed with breast cancer. We just have a baby, 2 years old. But I need to sell my apartment to treat. You can see it was disaster for Chinese government, right? A socialism country. People need to sell their house, sell their car to treat for cancer, for critical illness. So that's why the Chinese government launched several mechanisms to encourage people to buy private health insurance. That's the only solution they can see to help patients because government, aging population, the economic goes down, right? So you can see the health insurance accounts more and more for the health expenditure in China for past decade, but it's only 5. It's for general health expenditures. But for like cancer, it's more, much more than 5% of it. But when we analyze the milestones, we found very interesting things. Okay. You can see the triggers of those milestones. At 2014, the Chinese government launched tax incentive for health insurance. If you buy health insurance, you can pay less income tax. As an employer, if you provide health insurance policy to your employee, you can get tax deductible for your enterprise tax. This is first one. The second one is very interesting one. I will go more detail to you, is the $1 million medical insurance, which is, okay, my wife bought for me, for the entire family. It's quite interesting. And 2015, they launched a new insurance called the God of Medicine. Oh my God, the God of Medicine. I was one of the members who supported insurance and reinsurance industry to design this. I will show you, everybody want to buy it, I assume. Then 2017, 2016, the Chinese government seen, $1 million insurance. The God of Medicine insurance is quite interesting. We want to launch it, led by the government, to have some pilot of it. Then, so 2015, 16, the Chinese government launched pilot of supplemental medical insurance. And to 2019, it's expanded to nationwide. So that's the milestones of it. So I'm a good insurance seller agency, right? Okay, you can see the premium changes, 3 different eras, right? The first one, before 2015, the majority of the insurance policy, health insurance policy in China is critical illness, lump sum. As soon as the policyholder diagnosed with critical illness, you get a lump sum, bye-bye, never see you again. So many people get money, cancer, okay, I will leave it for my wife, or buy a new house, buy a car, or spend a holiday to Italy and for the rest of my life, right? The insurance company never control how they spend money. But you can see up 2015 to 2019, $1 million insurance, right? The God of Medicine insurance. Rapidly, the revenue goes up. And up 2019, you can another curve of it. The central government, Chinese government, launched a supplemental medical insurance policy in China. So it's very clear when we review the past 10 years, it's very clear the insurance premium growth is very tied to the government policy, to the insurance policy. But why? I will show you why. The first, sorry, it's a little bit small. The first one is $1 million medical insurance. Why the million? The sum of insured, the total coverage, could be 1 million, even 6 million RMB, which is one CNY is 0.6 ringgit. You can calculate. But the premium for my age is only like 500 ringgit. 500 to a million, even 2 millions. It covers all out-of-pocket treatment cost in 1 year. But with deductible, that means you need to pay out-of-pocket certain, like 300,000 US dollar. Then it will start to pay you. But the cancer, there's no deductible for cancer. As soon as diagnosed with cancer, you can get reimbursement from the insurance companies. So that's $1 million insurance we call it in China. Until now, it appears like 2014, 2015 in China. Now, more than 100 million people bought that policy. Interestingly, 80%, the buyer of this insurance is ladies. They bought for their family, so that's why they launched family package for it. I never know it until my wife told me 6 months later, hey, I bought your insurance. What kind of insurance I have? She showed me, I bought you from this. I said, you should ask me, right? Because I am supposed to be the expert of insurance in my home, right? So, okay, that's it. So, but I'd like to tell you, some insurance companies, some financing institutes are going to launch this kind of scheme in Malaysia very soon. From China, from another market, they're going to design the scheme in Malaysia as well. And the second one, I involved in the very early stage, we call it a god of medicine, right? So 500 ringgit, 1,000 ringgit is still expensive for B40, for the poorest population, right? So then that's why the god of medicine launched in China on 2016. The coverage amount, I mean, the sum of insured, 1 million to 2 million RMB, which is like 600,000 to 1.2 million ringgit, right? But the annual premium for 30 years old is only 36 ringgit. For 50 years old, it's only 90 ringgit. Yesterday, I had a meal around here, cost me 70 ringgit. You can imagine it, right? 90 is only a meal with your family, with your wife, right? So not a fancy meal, a McDonald's meal, right? Then the coverage is cover more than 100 types of treatment drugs, cancer treatment drugs, which 100% out-of-pocket, self-pay in China market. You can see in those years, many of advertising all around China. Subway station, public bus, rural side, everywhere. Many people join that scheme because it's cheap and high coverage. Then government see it. Ooh, insurance companies, you can do it so cheap. What can I do to encourage more people to join this scheme? Then the supplementary medical insurance came to the market. Government said, okay, I need to lead this project to control the insurance company, their profit, to design the principles to help insurance company to launch it. You can see the pilot was from 2015, only one city, but now more than 172 different scheme launched. More than 172 million people enrolled in China for different scheme in different cities. The product is different, more than, it's almost 300 different products, different schemes in China, around China. So it's city level. We call it the city level supplemental medical insurance. What happened to it? I will show you. And it's led by the government. People join voluntarily, and government insurance company underwriting it. Citizen volunteering to join it. I will show you a detail, which I live in Shanghai. I will show you it. So now it's the enrollment period. I just paid for it. So coverage is from July the 1st this year to June 13th next year, right? So, okay, the premium is 77 ringgit every year. Most importantly, no age limit, preconditioned patient, no sex different. My father is now in ICU for more than 8 months. My mom is 81 years old. My grandma is 99 years old and will spend her 100-year birthday this year. I bought for all of them in the same premium. In the same premium for the SMI in Shanghai. No age limit, everything. Wow. What's included in the SMI? The first one is hospitalization. Any out-of-pocket cost during hospitalization would be reimbursed. But you can see for the precondition and the non-precondition, the reimbursement portion is different. And the second one is domestic specific drug, not reimbursed by the social insurance, like pembrolizumab again. The most expensive drugs launched in China like immuno-oncology. You can see CAR T, right? So this kind of expensive treatment plans are included in the scheme, with all people the same premium, 77.6 ringgit for it. You can imagine. In Shanghai, Shanghai's population is like 23, 24 million, I think, just similar as Malaysia. So it's all city level. It's all city level. Not someone said because China, you have 1.3 billion people, so you can do it. I said no. It's all city level. All accurate work done by city level, not nationwide. Every city has their own scheme for it. A case here reduce the burden for more than 40%. You can get the full deck, I think. So the government lead everything to design the principle in Shanghai. Oh, which cancers are the most mortality, most highest cost in Shanghai? What's the incidence in Shanghai for different? Then the government will design the principle, organize the insurance. Come. I will launch it next year. Okay, please design the scheme to, then submit your scheme. Different insurance company, reinsurance company, they submit they submit their plans to the government. Then the government organize the academic institution, NGO, like National Cancer Society, to help to review it. Not choose one, but organize it, mix it, finalize it. Then call all the insurance company, come. Now here is the finalized version of Shanghai, of Beijing, of Hangzhou, of different cities. You want to take it, then you take it. If you do not want to insure it, then you just leave, right? So, for example, in Shanghai, 7 different insurance companies joined the scheme. They launched together with it. And for the enrollment phase, government takes the most role of it. That's very important because normally insurance company, 40% to 50% cost is the enrollment, advertising, right? The component, the commission for the sales agent. But now government takes all of it. Social media, radio station, media conference, everything to it. And the insurance company, they do the claim work, then submit the report to the government. The government will organize like universities, NGOs to review all the report to decide which kind of policy, which kind of principle they need to design for next year. Right, so that's for it. So I give you some impact for it. So there's no very clear information about what's the impact nationwide, but I do have some interesting facts for it. First of all, people may ask, why insurance company want to do this? It's too cheap, right? So I'd like to tell you, overall, in China, around China, those around 300 different SMIs, the average profit is 70%. Even low premium, high coverage, they still can get 7%. And not only for profit, but also you can see here, 40% people is their first ever insurance policy in their life. They never think about, oh, I need a health insurance. But now they have it, 40% of people, right? This is a huge treasury for the insurance company, right? So I have new clients, then I can develop more insurance for them. And the biggest claimed amount, 1.ish million there, and the leukemia, the case, and another, where I can find it. Okay, here, Sharif. Improved 27% increase the portion of patients use innovative drugs after SMI. Right, so that's significantly changed the game. Okay, time is up. I have my own timer. Last slide. Okay. In Chinese, we have a word called 抛砖引玉. I threw a brick, then attract jade, right? So I'm not saying Malaysia should replicate the China model, but I want all of you, insurance industry, pharmaceutical companies, HCPs, to think about it, or even government, NGOs, think about it. What we can do next step to help the patient in Malaysia to maybe have one of those solutions, or maybe design, customize those solutions for Malaysia people. Then we can have another future. And that's all. Thank you.
Wow, thank you, Mr. Alex. I would like my premium to be only $97. But yes, that was a very good insight from what is happening in China. So for our next case study, we bring us a bold and future-focused perspective on digital financing and healthcare access. We're honored to welcome Dato' Nuraslina binti Zainal Abidin, Group Managing Director and CEO of Theta Edge Berhad, a trailblazer in digital transformation with over 18 years of leadership and experience. Named Malaysian Women's Corporate Leader of the Year in 2024, Dato' Nuraslina has championed both innovation and inclusivity, from reshaping fintech in public services to uplifting undeserved communities through digital empowerment. So please join me in welcoming Dato' Nuraslina to the stage.
Hello, good morning everyone, and thank you for the opportunity to speak at this very important gathering. Today I would like to set the expectations right. What I'm about to share with you is not a final product or a proven implementation. It's a concept, an evolving idea that I believe could help us address a very real, very urgent issue on the financial barriers that is faced by cancer patients, particularly at the point of screening and early diagnosis. We all know that the earlier we detect, the better the chances of survival, but for too many Malaysians, especially those in the M40 segment, who fall just outside most subsidies, cost becomes a delay, and delay becomes danger. And this is what we are trying to design, and this is, again, like I said, it requires a collaborative effort. And what we are calling as Cancer Access Flex is not about creating depth, it's about designing dignity. It's about making room in our ecosystem among government, fintech, zakat institutions, insurers, and social security agencies for us to have a flexible, blended approach to financing and financing in cancer screening. So you can see that that's a big ambit of cancer that was shared to us by Dr. Morali earlier. But we're just focusing on one aspect, which is screening. We fully acknowledge that this idea needs refinement. It needs input from every one of you here today, clinicians, policymakers, funders, patient advocates, and I hope that these sessions actually become a starting point for all of those conversations that we need to have. So with that, let me walk you through this concept, not a solution in isolation, but a possible building block in our shared mission to make cancer care truly accessible. The cancer screening challenge in Malaysia, I think Dr. Morali is an expert in that. He has shared with us many data. We must address the uncomfortable truth. Too many cancer patients are actually diagnosed too late, and this is not simply a clinical problem, but it is deeply rooted in financing issue. A cancer patient who earns daily wages, like we all know today, the younger generation are gig workers, and gig workers do not have social protection, and they also do not have EPF accounts. And this is a growing problem. Even in organizations like us, we see more and more demand and requests for people to work on an hourly basis, on assignment basis, and they don't want to have a fixed or a permanent job. And that means we need to design protection for them in a different manner, right? So if they earn daily wages, they are part of an informal workforce, and typically organizations do not cover nor give benefits for insurance and medical for informal workforce. they may wait for months before they can act on a doctor's referral for imaging. This actually happens in our organization. We have a staff who falls under the category of M40, did not inform any one of us in the organization of her pain and her referral to get screening. And when she went to the hospital, it was already too late and it was detected at the stage 3. So this is real example that we organization face. And this delay actually, we all know that it returns to being from a treatable cancer to become a terminal condition. And we must address the structural inequities in our health access system. That makes all the human capital experts in organizations start to now have to sit down and rethink our insurance and medical coverage for our staff, because there are different group of people right now that do not want to have a full-time employment in our organization. And how can we explore fintech tools that could offer a new pathway towards financing this for the future workforce? So, sharing a little bit of data, I think this is, oh, sorry, I need to click. I'm sorry. Okay. So sharing a bit of data, 60% of our cancer patients in Malaysia are actually diagnosed at a late stage. So we are seeing these predictable and preventable delays happening. And according to the Ministry Data of Health, most of them are actually diagnosed at stage 3 and 4, and 40% are delayed in screening because of financial hesitation. And for the B40 group, screening is often subsidized, so we know that is being covered. But for the lower M40, the single mothers, the small traders, the gig workers, there is a structural gap that we need to address. They are not poor enough to receive zakat, but not rich enough to act quickly. Right? So that's a space that we are trying to explore with Cancer Access Flex, a model that should give these patients a safe, ethical way to act when it matters, not when it is actually too late. So ladies and gentlemen, each player in our current healthcare financing ecosystem brings real value, but we also know that every model has got its own limitation, and there is always room to grow. Today, insurance models are well positioned for major illnesses. It's good to see the China model, like, we really would like to pay just 76 ringgit for our critical diseases, which now I think we are about 300 plus, yeah? So, I mean, if that is the amount, all companies will subscribe for their people. That makes it affordable, right? But now critical diseases is a big bulk. So for an organization that has 2,000 employees, that is a big increase in cost, right? So, but they haven't yet expanded, insurance haven't yet expanded fully into preventive coverage like screening. So most of the medical insurance coverage that we have right now, especially for organizations, we don't have that covered in our policy, and it has to be from out-of-pocket expenses. And not all employees are actually covered for out-of-pocket medical expenses. That presents an opportunity for us to innovate in a product design and risk sharing. So government subsidies, they remain essential. They are the backbone of our equity, like what have been shared by Dr. Murali earlier, in our system, but they also tend to focus on most vulnerable target audience, which can leave, again, the M40 segment being underserved. So this gives us a space to explore co-financing models that are inclusive but yet still targeted. So NGOs and charitable organizations like NCCM play an incredible role in bridging this gap today. But we all know that charity by nature is episodic, and it can always match the urgency of clinical needs. It can never match the urgency. But we believe that can be complemented with more structured tech-enabled mechanism. So most importantly, the patients need speed, and when the doctor says you need to be screened, there has to be a fast, flexible way to say yes. Today, just looking at organizations who are covered by companies' medical insurance coverage, they have to write into the HR. HR will then look at all the medical benefits that we have and will say, well, I'm sorry, we don't have that being covered. You have to screen first, and then later the insurance coverage will come into picture. Then by some means, we will say we have our, so for companies that contribute to zakat, we'll say, okay, we have our zakat, we can pay for this particular employee. So that takes time, maybe about 2 weeks time frame for that to be settled, right? So it has to be fast, it has to be flexible to say yes without waiting for approvals or donation. And that's the gap we're trying to fill, and not by replacing what's already here today, but by connecting all of it through a more agile, compassionate system, and let every stakeholder do whatever they do best, but only faster and together. So ladies and gentlemen, as we began shaping this concept, we actually looked outward first. We scanned what other countries have done to address similar access and affordability challenges in cancer care. In India, there are health EMIs used for diagnostics. In the Philippines, they have field health partners with employers to bridge access. So they work together with companies, then they develop this product. In Indonesia, it actually combines the national insurance with zakat-linked co-pay schemes. Even in the UK, ESG and lottery-funded models are beginning to play a role. These models show us that innovation is happening. It's a pain everywhere in every other country. At the same time, they also tell us that there is no single perfect template to follow. Right? No one has yet to build a Sharia-compliant, multi-stakeholder, and dignity-first financing framework for cancer screening that blends technology, zakat, ESG, and public-private co-funding. Right? That's where Malaysia has an opportunity, not just to replicate, but to adapt. We have the institutional trust of NCCM, and the tech enablement capacity of fintech companies within Malaysia, and a public sector that is increasingly aligned with digital inclusive healthcare, with all the announcements that we've seen recently. What we are sharing today is exploratory, and as we all know, change rarely begins with certainty. It begins with a collective willingness for us to try, to collaborate and iterate. And if we can do this right, Malaysia doesn't just follow global trends, it sets one. So Cancer Access Flex is not a product. It's a framework we are exploring. A concept that asks, what if we could blend patient co-payments with structured support from funders like zakat institution, endowments, social protection agencies, and donors? It starts with a question, can we do it, right? And the intent is really to help patients, especially in the M40 category, get screened when it matters, not when it becomes urgent or unaffordable, and therefore they turn to the loan sharks that what we saw earlier on in the talk by Dr. Murali. The technology layer can be provided by any suitable digital health financing platform, but the power really lies in the governance, in how we protect patients with triage protocols, repayment flexibility, and a safety net that absorbs hardship, not punishes it. So the target use case that we are looking at is actually on early cancer screening. I think is a powerful use case, especially the ones that are in mobile diagnostic outreach. We're talking about affordable procedures, a mammogram, a biopsy, a chest x-ray, potentially available via NGOs or clinics, clinic kesihatan here in Malaysia. And these services typically fall between 300 ringgit to 2,000 or 3,000 ringgit. And really that's not an impossible amount, but it's often just out of reach. So this is where we can embed zakat, wakaf, and institutional support. We envision a co-pay mechanism where patients pay a part, the platform covers the rest temporarily, like a bridge, and subsidies come in if needed. So, Cancer Access Flex. This slide actually outlines the collaborative framework we envision for Cancer Access Flex, built around the idea that no single institution can solve this challenge alone. At the center of it, we nominate NCCM, the clinical and patient-facing anchor. They lead the medical triage, they confirm eligibility, whether a B patient is B40 or M40, and also administer the Cancer Relief Trust Fund. They already have the trust of the community right now, and which is really a critical asset that we need to monetize. Fintech partners like DataEdge and others can provide the technology stack, the platform that manages our co-payments, installment, subsidy triggers, and reporting. We bring the tech, but always with the patient dignity and simplicity in mind. So donors, ESG partners, and corporate CSR contributors, they play a crucial role in creating the cancer access pool. This pool is then used to support M40 patients in hardship and absorb the repayment risks, so patients are not penalized for falling behind. So Zakat institution and Wakaf boards help cover B40 and Asnaf's group through a Sharia compliant subsidy mechanism. Their involvement ensures the model remains ethical and inclusive. Perkeso and EPF represent the social protection side. We believe right now there is some form of policy where Perkeso co-fund screening for the self-employed under their existing health protection schemes, and that EPF allows micro withdrawals from account 2 for cancer screening. But through social media updates, you can see there's a lot of complaints in terms of the time that is taken for people to withdraw from the account 2. Simply being, I think, is the verification that this is a valid withdrawal. Yeah? Because, again, the data that is being shared on our retirement fund by Jonathan earlier shows that we have issues with people going into retirement as well. So finally, we are also suggesting NCCM-owned endowment fund plays a safety net role. If all else fails, if a patient cannot repay and no subsidy is triggered, this fund steps in to quietly clear the balance, maintaining the patient's dignity. Each role is designed not just to function, but to reinforce the others. This is how we can make access scalable, ethical, and truly Malaysian, like Jonathan shared the white flag earlier. So ladies and gentlemen, this is the envisioned operational workflow. It is designed to be fast, digital, ethical, and responsible. We envision a 48-hour approval cycle from point of referral to procedure completed. The digital wallet handles co-pay, zakat status, and repayment scheduling. One area we are exploring is partnership with JAKIM and Zakat Institution to trigger subsidy automation based on patient profiles. We also welcome integration with electronic medical records system to make clinical triage seamless. I have 5 minutes left. Okay. So this slide gives you a high-level look at the digital platform that supports the Cancer Access Flex model. It's not just for transaction, but for trust, speed, and transparency. On the left, you'll see the patient interface. This is where a patient, after being referred by NCCM, logs in to confirm their identity, check eligibility, and view flexible repayment options. The interface is then designed to be mobile-first, simple, and in plain language. At the clinical partner level, NCCM or MOH clinics verify medical needs and input the referral. The system then validates eligibility using rules tied to income, so co-payment capacity and possible zakat or donor fund triggers, which means this looks simple, but at the back end, it requires a whole village to come in together and share their data for integration purpose. Behind the scene, our engine calculates a risk profile, applies subsidy logic, and instantly proposes a co-pay or installment plan. If the patient accepts, screening is scheduled, whether their zakat within 20 to 48 hours. On the right side, we have the funders, whether they are zakat institution, ESG donors, or Perkeso, they get access to real-time dashboards. These show anonymized patient numbers, fund utilization, and repayment behavior. This creates full transparency without compromising dignity. We are not building a loan platform here, let's be clear. We are building a trust and relief platform. One that connects the patient journey to the financing ecosystem in real time, ethically, and with measurable impact. So, next, in reality, we need to address the elephant in the room. What happens if the patients don't repay? Right? That's a real concern. One that we have to carefully prepare for. Initial thought process and mitigation would be, first, we require a small co-payment upfront. This helps to ensure that the patient is committed and weeds out our potential misuse. Second, we only activate flexible financing when the case is clinically justified. This avoids overuse and unnecessary costs. Third, the model is structured to be Sharia compliant. That means no compounding interest, no penalties, and dignity for the patient. Now, what happens if a patient misses an installment? We offer an ethical and compassionate alternative. They can reschedule the payment. No external collection agencies here, no debt collector, right? Typically, when you put in a system in place, normally you will have to have a debt collection service, which you will receive phone calls, sometimes not so nice, to follow up for payment. Just human engagement and hardship-based support, but even if they can't repay at all, we have a final safety net. That's where we are proposing the NCCM endowment fund steps in. If repayment is still not possible after rescheduling and eligibility screening, the endowment quietly clears the balance. All funds flow, especially from zakat, donors, ESG pools, are tagged in a dashboard. This transparency builds donor trust, encourages new contributors, and ensures the system remains accountable without being punitive. Ladies and gentlemen, this concept can't work in silo. It can only work through public-private partnership. It's not just about co-funding, it's about shared responsibility and also aligned incentives. We are also proposing the creation of a cancer screening relief pool, a dedicated fund that blends contribution from MOH, who actually sets the clinical protocols and ensures patient safety, from the employers, companies, who will benefit from healthier, more productive employees and pay lesser premium for insurance. Insurers who can offset risk and build micro-coverage products, zakat and ESG donors who seek measurable ethical impact with clear traceability. Now, each contribution is tied to a transparent outcome, number of patients being screened, time to diagnosis, repayment behavior, and hardship subsidies distributed, all visible via real-time dashboard. For employers, it means workforce wellness. For MOH, it's preventive policy and action. For donors, it's ESG-aligned impact backed by live data. So this is our chance to design a health financing sandbox that's not abstract, but deeply rooted in real patient stories and system transformation. If we can pool our resources, policy, technology, and capital, we can make early detection a national standard, not a socio-economic privilege. So the big, audacious goal should just first be started by having a pilot. It should not be a payment model, but it should be a bridge to a broader goals. Cancer Access Flags maps directly to the SDG agenda. It brings Goal 3 to life by turning early detection into a default, not a luxury. It supports Goal 10 by giving dignity-first solutions to those caught in between subsidy and affordability. And most powerfully, it represents Goal 17 in action, where government, technology firms, endowment funds, zakat, and employers co-create a sustainable system. If we do this right, this is not just a cancer program. It is a scalable, ESG-aligned health equity models for the region. So as I wrap up, I want to thank all of you again for allowing me to share this concept, Cancer Access Flags, with all of you. This isn't a finished model, and it's not something we can implement in isolation. But I do believe it can become something powerful if we designed it together. So the goal is simple, even if the solution is complex, to ensure that no one delays a potentially life-saving screening because of money. That should not be a privilege. It should be a basic human guarantee. So like the saying goes, if you want to eat an elephant, you have to eat it bite by bite. So this is a big problem. It's a huge elephant. It's a dinosaur. So we have to start somewhere. We have to start with a pilot, scalable version, make sure that it is proven, and then we move on. Whether you're from the ministry, the private sector, the zakat institution, per queso, or an insurance partner, your role is always critical. I'm not extending this as a pitch, but as an invitation for more conversations to happen. And like the saying goes, if you want to raise a daughter, it takes a village to do so, right? So this is a village. This, in fact, takes a whole country to do it. So let's build something, Malaysians, something equitable, something that meets our communities where they are and gets them the care that they need when it matters most. So I look forward to have conversations that will follow and to working with many, many of you to turn this concept into something real for the people who need it most. Thank you so much.
Thank you, Datuk Nur Aslina, for that thought-provoking glimpse into how fintech innovation could make cancer care more accessible, flexible, and inclusive for all. And thank you, Teta H, for the financial aid to cancer screening and making cancer screening more accessible for all Malaysians. So as we near the final stretch of our case study series, we're pleased to welcome Mr. Anish Junak, Chief Product Officer at MCIS Life and a Fellow of the Institute and Faculty of Actuaries. With over 22 years of experience across life and general insurance in Malaysia and emerging markets, Mr. Anish brings a deep understanding of both actuarial precision and practical innovation. He leads with a focus on designing sustainable insurance products that meet the evolving needs of Malaysian policyholders with a strong belief in collaboration beyond the financial sector. Let's welcome Mr. Anish as he shares his insights.
Thank you for having me. Hi, everyone. I'm conscious that I think some of the presentations may have run over a bit, so I'm between you and lunch. I'll try and make it a bit faster. I also have the excuse that I think Dr. Murali has stolen some of my thunder with some of his content, but that's okay. I'll try and find a way around it. I really enjoyed listening to the couple of presentations that have come before me. It's been fun. It's nice to see some of the other solutions that have come about that are very different to my solutions. As you've heard from the MC, so I'm not a doctor. I know very little about cancer. Okay, maybe more than very little, but I know about cancer a little bit. And I'm more of a numbers guy. So we'll talk a little bit later about the solution that I think we in insurance can bring to help with cancer financing across Malaysia. It was very nice to see what Datuk said earlier about one of the gaps was that there is a gap in insurance for screening, diagnostic screening. I mean, you don't have that. So I've been working in insurance for a long time, and we have all sorts of insurance, but I've never seen actually this problem where we have this gap with screening. So we have medical insurance, which Dr. Murali has talked about. We have life insurance, we have critical illness insurance. But the screening is quite an interesting one. So I'll tell you a little bit story about how this all came about. Not too long ago now. Yeah, it was probably one of the first times that I met Dr. Murali. And yeah, it was so interesting to hear some of his thoughts. And you know, that's what gave rise to some of what we've come up with today. So I'll get into my presentation. So small premium, big protection. So what we're trying to do is exactly this thing of insurance for a diagnostic insurance, and it's a really small thing. You know, it's not a big insurance. It's not big like it's not as big a premium as you see in health insurance and those types of things. So it's much smaller, which makes it a lot more affordable for Malaysians. I think some of the prior speakers were saying that a lot of the barriers that we have to screening is that it's just, or one of the barriers is that it's just expensive. So, you know, we have to think about how we can find solutions around some of these. And I was really interested to see this big table that Dr. Murali had. So I was trying to see where does my solution fit in that. And yeah, I think I figured it out, but I'll have a discussion with you later to see to see where it fits. Right, so why do we do screening? I think we've already talked about it, so I'm probably not going to spend too much time talking about why we do screening. We know why we do screening, right? So you've already mentioned it's early detection, it's improving public awareness. If you screen early enough, you pick up something early enough, you can actually treat better, it reduces symptoms. It's not only that, it's also helping the public at large with a bigger problem that we have. So screening is actually critical. And in actuarial, we have this thing called the control cycle. So you'll develop a solution, you see how it works, and you got to go back and see what's working and what's not working. So the screening is so important because it helps us to do that. It helps us to go around and see what works and what can we change and what other solutions that we can develop along the way. So diagnostic and early screening is so important. I can't stress how important it is. I think it fell into one of the second pillars that you had there. I think the second one was screening. So I think this already talks about all of these things, or what we've been talking about for a while now. So the early detection, reducing the burden on the healthcare system. And we're not going to reduce this burden unless we start to think about other innovative ways and partnering with different people. So I was glad to hear Datuk talk about. I was glad to hear her invite me to come and partner with them on some of these schemes. So we've been working with, at MCIS Life, we've been working with NCSM for a long time now. So it started all the way in 2022, where I think NCSM had, at that point, had already realized that screening was an issue. So it was not that easy to get screening. Most people, they don't really want to do it. They're a bit scared of it. It's not so easy if you live in rural areas to go and find a way to get screened. So what we developed at that point in time, slightly before my time at MCS, was this concept of this. We now call it the purple truck. The purple truck has been amazing. It's the 17-foot vehicle that drives around all over Klang Valley and other places. Rural areas, and it's equipped with a doctor, with a couple of nurses, medical equipment, everything that you need to do screening. And so nice because it goes around, finds people, goes to schools, goes to universities, and all of those types of things. It's really nice. So that happened in 2022, and it started off as a bit of a COVID thing. If I'm correct. So it started off as a bit of a COVID thing, we just started with COVID screening, etc. And that was when, some of the ideas came about that actually we could start to screen other things. So actually there was some good things that came from COVID as well, Jonathan. So yeah, so that was one of the things. Then we expanded in 2023, spending more time in rural areas, spending more time at universities, and it's been going really well since then. I would call it a highly successful initiative. From an MCIS perspective, I think even to NCSM, I would say congratulations for what you've been doing, or what we've all been doing with that purple truck. You've won along the way numerous awards. I think we've screened, it could be upwards of 8,000 individuals since then. It might be more. I might not even have the number, but it's been a lot of people that you've been screening, and we're now taking it a bit further. Is a bit of a sustainability, climate change part to it. So now you can go even further, where it's powered by solar. So it makes it even better for us to go into these rural areas. You don't actually need power. You can just hang around for days, powered by the sun, and it makes it really useful and really effective in terms of screening. So come 2025, we move on a bit past the screening, and we're trying to bring to you some sort of insurance that makes it easier for people to access screening. So we're trying to find a way to help you to diagnose cancers earlier. So we have a product that we've been working on. Yeah, I think I've talked about these, and we've talked about these enough, so I'm going to skip through some of these. So we've had a product that we've been working on. I'll leave this up here for a while I tell you how I met Dr. Murali. So we met over a dinner. I was introduced to him by Pak Joe, who's also NCSM ambassador. So thanks, Joe, for making the introductions. And we were having just a simple meal, nasi goreng, was it? With some extra chili padi and extra ikan bilis. I'm not Malaysian, so that was really good food for me, and I've come to enjoy it a lot. So we were having that, and we were just talking about cancers and the medical problems that we're having in the country. You know, the high medical costs and all of those things. And we came up. You mentioned a really interesting thing about screening, and you said, you know, how do we solve the screening problem? And I was fairly new at the time, and I said, you know what? Let's see if we can come up with some sort of a product that can help. We haven't launched the product yet. We're pretty close to launching it. It should be in the next couple of weeks. So we're all very excited about the product. It's not going to change the face of screening, but at least it's a start in the right direction. It's what we want. So if I just quickly talk about how insurance, I know you've talked about pooling, but I just maybe want to dig into a little bit about how insurance works and how this can help us. So it's a very small premium that you will pay. How insurance works is it pools, like you've said, it pools, so a lot of people will come together and they will all pay this small little premium. Some people, maybe 1%, 2% of them, will have a claim or will have a need for the insurance, so they will have a need and that requires a lot of money. The rest of the people may not. So even though we know, I mean, prevalence of cancer is quite high, still in the bigger scheme of things, it's not that big. So maybe 5% of people, etc. Right? So if you who will so maybe the number is small. So you have only a small number of people who will claim or who will need the money, and there's a large number of people who will just contribute these small premiums that will fund that. So that's how insurance works. Just very simply, that's how insurance works. And that's the concept that we're trying to use here. It's a very simple insurance concept that's been around forever and ever, but we've never ever thought to apply it to diagnostic insurance. So this is really exciting for us. So quickly how it works, maybe a little more detail. So you start off, and like I said, I'm not a doctor, so I don't know all of the terminology. You start off with some very simple screening at first. So you will do a X-ray, chest X-ray at first, which is fairly cheap, relatively cheap. You will then have a small proportion of people who will detect some anomaly or give you something that tells you, oh, there's an indication, maybe you have cancer or you need to move to the next level. Majority of people will not. You then go on to the next stage where you will have a CT scan, and you move on to the next stage where you will have a biopsy, etc. So how this product helps is you'll pay your small premium, and if you need the different stages of the screening, you will have access to it, and you will have funding for it. So it's just a different way of funding from insurance. And if you go all the way to the end, if you have cancer, then there's also a cancer payout. So it links up with the critical illness part of the insurance as well. Yeah, so I think this is very exciting, and I don't want to go into too much detail yet. You will spend a bit more time when we launch this. So I think that's about it. That's about what I wanted to talk about on this segment. You can tell me a bit later where our thing fits into your big matrix there, because I couldn't really figure it out. Maybe we straddle one or two of the items. We can, So I don't know if I think that's enough time, and then we're on to lunch probably soon, but I will hand you over back to the MC. Thank you.
Thank you so much, Mr. Anish, for showing how insurance can be reshaped to better serve patients in real and meaningful ways. Before invite our next presenter, I'd just like to let everyone know if anyone would like to leave for Friday prayers, please do so when you need to go. Dr. Amar, Sunway Uni representative, he's wearing a white shirt. He will bring whoever needs to go to the mosque probably around 1 p.m. But yeah, if anyone needs to leave, please do so at your own convenience. Okay, so to close off our case study series, we're honored to invite Miss Dayang, the Childhood Cancer Program Manager at the National Cancer Society Malaysia. With a strong foundation in operations, training, and project management, Ms. Dayang leads impactful initiatives that support young cancer patients and their caregivers through education, advocacy, and community engagement. She also plays a key role in resource mobilization and public awareness efforts across the country. Please join me in welcoming Ms. Dayang to the stage.
Hi, good afternoon, everyone. It was lunchtime. I'm sure everyone is very, very hungry at the moment. I hope that I will do it very, very fast. First of all, thank you, Alisa. I'm Dayang Mirafiori, the Childhood Cancer Program Manager for National Cancer Society Malaysia. What I'm going to share with you today is something that very, very close to my heart and a brainchild of Dr. Murali. Which is a cancer pot. This mobile app was born from countless stories that we heard from all the cancer patients and caregivers in Malaysia. The stories of patients not just battling cancer, but struggling with everything that comes with it. The cost, the distance, the silence, and the fear of uncertainty. Cancer pot is our way of saying, you are not alone in going through the journey of cancer. Wait. No. I think everyone here, either you are from the NGO, you are from the government, MOH or MOHC, or the corporates, we all aware that there's a lot of hidden costs in cancer journey. Cancer journey is not just the medical bills, not just the doctors, the chemotherapies, the surgery and the radiotherapies. But many patients, especially from those lower income backgrounds, the medical bills are just the beginning of their cancer journey. It is the hidden costs that quietly weighed them down. Things like transport to the hospital, daily meals, a place to stay during the treatment, and mostly importantly, emotional and mental support. These are not luxuries, but essential for them to survive and recover. And yet, they are often the very things that patients and caregivers are forced to sacrifice. I'm sure a lot of us heard about this because we are all from the NGOs. So here, I'll share here like what some patients and some caregivers share with me during the whole 2 years I'm with NCCM. And we also heard like some people, I would say like one of the stories that really touched me is like when a caregiver have to stay in a car or by the side of a walkway in the hospital while waiting for their family members to receive treatment. Really, really touched me. So that's why when Dr. Murali asked me to come and help with this cancer pot, I'm in, all in. So let me share the story of this. A single mother, 20 years old, I think. She has a 4-year-old daughter. She was just started working for about 2 weeks when the daughter diagnosed with ALL, leukemia. She only have 8 ringgit when the doctor asked her to come to KL with the ambulance to UMMC, University Malaya Medical Center. It was very frightening for a very young mother, accompanied by her own mother. They stayed at the hospital for about a month before the daughter can start treatment and all. So the cost about 30,000. I was called by the JKSP officer and asked to come in to help them up. So with the Can Support Network, we are able to mobilize some support and together with other NGO to pay some of the bills, that's just hospital bills. And Grab Malaysia come to help us with the transportation for the family to go to the hospital. And we also able to reduce the cost of accommodation by taking them and stay with our Home of Hope. This is the interface of Can Support. It is, Can Support is more than just informational tools. It is a lifeline, a platform where cancer patients and caregivers in Malaysia can request real, tangible help. The app was generally developed by our partner, Tata Consultancy Services Malaysia and Berhad, with the support of Malaysia Airlines Group. At the moment, we have all these partners, Grab Malaysia, ERL, KTMB, to support the transportation part. We have all our Home of Hope and our psychosocial support consultants in the network. We can support, connect patients to the helps that out there, but often hard to find. So these icons are some of the services. If you like to see more of the app or to try the app, our partner Tata Consultancy is outside there to do a live demo. So you can come and talk to us. Oh, okay. How to play this? Sorry, I just have a short video for everyone. Wait. What's that? Thank you. Can I click next? All right. Why it matters? Why it matters to all of us here? Because the goal is simple but powerful. It's to make sure that no patients, no caregivers, no families has to choose between treatment and survival costs. With Can Support, we hope that we can help reduce the treatment dropout, support that the caregivers support caregivers more effectively, and provide patients with dignity and stability that they need to fight the cancer. And when patients are supported holistically, their outcomes mentally, emotionally, and physically improve drastically. Currently, after 1 year in the journey, we began the pilot project with 50 family of childhood cancer patients. I think more actually, they required frequent visits to hospitals. If you look at here, I think we able to help them save between 1,000 to 2,000 ringgit a month from just a logistic cost to the hospital. Not to mention the dietitian costs, the mental health support costs. This pilot involved families from Hospital Tengku Azizah, PPUM, Hospital Miri, Hospital Pulau Pinang, and Hospital Raja Permaisuri Banun Ipoh. So from here we see it is a powerful reminder that we need to assist them reducing their costs. I'm not asking everyone to be a sponsor for this project, but what I want to call upon everyone, especially all the other NGOs who have their own psychosocial support services, to come on board and use this as one center platform to support the to support the cancer patients, children or adults, and their caregivers. This is why collaboration is important between the government agencies, hospital, corporate partners, and NGOs. Only through collective effort, we can build a compassionate, inclusive support system for all the families that are affected by cancer. Oh, sorry, forgot. The app will not succeed in isolation. So I invite all of us here to collaborate and put all your services together with us so that we can be the one-centered platform for the cancer patients, survivors, and caregivers. With that, I think that's it. Yes. I want to leave all of you with this thought that cancer is not just a medical journey, it's an emotional, social, and financial one too. With Cancer Support, we are taking a step towards dignified, holistic, and patient-centered care. Thank you for your time.
Thank you, Ms. Dayang, for showing how small and thoughtful intervention can make a big difference in lives that those who are silently struggling with unseen burdens. Okay, so now we are going to this most awaited session of the day, where you get to ask all your burning questions to our panelists. And of course, we have our moderator as well. So again, may we invite Mr. Ragunath or Pak Jo to come up, and all our panelists, Mr. Jonathan, Mr. Alex, Datuk Nur Raslina, Mr. Anesh, and Ms. Dayang.
Datuk joining us. She's not here. Yeah, I will start without Datuk's presence. Okay. Yeah. So I know, like what the earlier speaker said, it's between me and the speakers at lunch. We'll try to do as quick as possible. But this is the most interesting part of the session, where you can ask some of the questions based on what the speakers were presenting. Okay. But before I get to that part of the questions, we're going to have a short engagement, me and the speakers, so that we will get this warmed up a bit. Because of time, I'm not going to introduce any one of you. All have been introduced. You know, you all been introduced earlier. So I'll just maybe get some questions going. I wanted to be quite cool with my questions, but Dr. Murali told me, make them tight. He said, get some hard questions. Okay, so Jonathan, I'm going to start with you. Yeah. Jonathan, share with us what's your revenue model?
It's very simple. What we are doing is effectively balancing the commercial needs of institutional investors with patient expectations on getting treated. That's what we're doing, effectively whilst converting a source of wealth that they could not have touched previously into something that would treat them, get them treated, help them through the current hurdles, and pay for the retirement expenses. But at the same time, enable investors to participate in this. So at the heart of this model is what you call a reverse annuity model, where we buy over their homes, like 100% of the title is held under trust by Kenaga Trustees Berhad. But because we buy 100% of the home and you're still living in it, we cannot give you 100% of the money, right? It doesn't make sense. I can't rent it out, I can't sell it the next day. So we tell you, okay, we pay you 10% in the first year, and depending on your age, it's 3.3 to 4% every year until you pass on. And in the meantime, the asset is still appreciating. So we take a view of how the asset could appreciate, and then look at how much we pay gradually. So perhaps you might actually pass on earlier than anticipated. Between maybe then we make from that, but give something back to the next of kin, as what we said, between year 2 and year 10. But yet we make a differential of the capital appreciation too. So so that's how we actually.
Okay, so an example now, you bought this property, got it at a market price of $1 million. Okay, you gave them the 10%, 100,000 first year, and then you said, okay, every year we're going to give you a certain amount. Okay, and if both of them pass away, because one pass away, you're still going to keep the other in the house. If both of them pass away, then you're banging on the appreciation of the property. Because then only the property will get transferred to Kelsis.
Well, yes, the property is ready with Kelsis.
Yeah, but what I mean, basically that's the time you actually can do something with the property.
Yes.
And you're banging on the appreciation of the property. Is that what your revenue model?
Yes, but there's something also to it, because what we always say is that we can never predict how long one person is going to live, right?
Correct.
I mean, I don't wish you to
Agreed.
die very quickly,
Yeah,
but
agreed,
also I don't know
agreed.
how long you're going to, I also don't know how long you're going to live.
Yeah.
So, but what we're trying to do is that mutualize longevity risk. I think Rash, we know what I'm doing, but what effectively is that with funds across Europe, they have hundreds of homes under portfolio. So which means that I don't know when one person is going to die, but in the portfolio of hundreds of homes, I can tell you that I have X amount of homes being sold every single year and capital return back to investors.
Understood. Okay.
So I wanted to say, Joe, what he's doing is very actuarial as well.
Correct,
so
right.
You can't predict for one or two people when someone's
so
going to die, when they're not going to die, right?
Yeah, yeah.
But if you increase the numbers more and more, it becomes very predictable.
Correct,
You know, just in terms of the overall numbers.
Understood.
So it's quite a smart idea.
Yeah.
Jonathan,
Good
do you have
idea.
do you have my card?
But this is where I'm going to come to you. Because you're from South Africa. South Africa, by the way, the most creative in insurance. A critical illness actually came out of South Africa by Dr. Christian Barnard. He's a heart surgeon, and his brother, they came out of critical illness. Today, it's all over the world. Okay, and they are very, very smart in terms of developing products, and one of the products is called funeral expenses. It's the number one product in South Africa. So talking about what he just talked about, Kelsis, what do you think about life settlement product?
Life settlement? You mean like livestock?
No, life settlement whereby a guy who's like me now, 65 years old, I got a policy worth $4 million, okay? And then you now buy the product from me. Life settlement? You never heard?
No.
Bro. Okay.
We never come. We don't have
Okay,
life
so
settlement.
that's another way of financing.
Is this one of your schemes?
No, it is.
Did Dr. Murali put you up to
so
this?
basically, companies then buy over your life insurance from you. Okay, so they buy over. So you are insured for $1 million, okay, but you only can get it when you die. Okay, so what they do is they purchase it from you based on your cash value, slightly more than cash value. Let's say they give you $300,000. They give it to you, but that beneficiary is them now. So when you knock off, they get $1 million.
Okay, my initial thoughts on this idea is a tough one.
Yeah.
I think what Jonathan is selling is different. It's a lot more tangible.
Agreed.
So you have that asset already. You're monetizing it.
Yeah. Now,
With insurance,
hold your thought, because he's talking about an asset as a fixed property.
Yes.
I was talking about an asset in terms of insurance. That's
yes.
all.
So
Yeah.
for me, that asset in terms of insurance is not really yet an asset. It's a contingent asset. It only becomes an asset once some event or other event happens.
Yeah.
So that adds to the complexity of it. It may be much harder to actually implement such a thing. But
possible.
Being harder to implement means it's more risk, and of course, more risk means more opportunity, which means you can make some more money out of it. So
Sure.
it's possible.
Yeah.
I don't know if I would.
Okay.
I don't know if I would do it.
Jonathan, one more question to you, okay? Because I like the part when you said, the way you are collaborating with National Cancer Society, where a certain percentage will be going to the National Cancer Society. You mentioned that.
Yes.
Okay.
Yes.
Can you just a little bit elaborate on how that works?
Yeah. So we adapted from Viager because Viager is a pure
the French guys.
the French system
Yeah.
where the willing buyer benefits immensely if you were passed on earlier. So which means like I've secured, like, for example, 100% of the property, but you knock off in 5 years.
Yeah.
Oh my goodness, I have only purchased, I've only got the asset at a fraction. But that doesn't sound very fair to the next of kin.
Agreed.
And we actually felt this is not us as Asians. We're not like the French. Sorry, I know French people. No, but so that's why we want to put in something that's fair to the next of kin. So therefore, if say the parents pass on within year 2 and year 10, there's a lump sum for them.
Correct.
And it's quite a large amount because it ranges from 5% to 70% of the home initial value.
Correct.
So either way you times it of 1.5 million is a heck of a lot of money that in our legal documents we have to give back when the home is sold, and as a result. But even you look at it, that could be like $500,000 ringgit coming back to you.
Agreed.
And so the parents may be thinking, they may not need so much. Maybe I give them 400,000 ringgit.
And donate 100.
The other 100,000 can go to charities now. So maybe I can open up a bit more about that. So in Malaysia, we see that civil service organizations like NCCM, we don't call it charities anymore, we see as CSOs.
CSO,
you do so much, and the impact you create is enormous. But the funding is always the issue. Trust me, because I know this because I'm a second generation social entrepreneur. My mom is the first one. She runs the Truly Living company, TLC. We started 20 years ago. And we know that we fund charities as a result of this from doing 20 years ago. And we know that we need large amounts of money. So that's why this system allows for that. So from the cancer side, we've got NCCM, we've got CRM on the cancer research side. We really need that. And palliative care, Hospice Malaysia, we have put them in also because we need to bring up their level of services to what we see in Singapore to deliver better care for the people that need it.
Really, I mean, I like the social aspect of your business. So I think that's really good. I mean, you got something that, because being ambassador of National Cancer Society, I'm quite happy you're doing that, You want to say something or what? No, if not, I can ask you a question. Bro, you talked about the lung diagnostic insurance, okay? One thing maybe you didn't mention was what was the premium?
I didn't mention it because I didn't want to mention it. So
the people are like, you want to know? Yeah? Okay, yeah.
So we will be launching it very soon. I think you can just wait for a month or so, and then we'll be able to tell you what the premium is. I can tell you it's very affordable. It makes a lot of sense.
Lesser than 3 figures. Lesser than 100 ringgit.
It's a good number.
Oh,
You like the number when you see it.
When I see it. Anyway, I know the number, just disturbing it. Now, from China, Alex. Wow, I thought that was really great. Huh? What do you all think? Yeah. Really, I mean, like, I want to be a Chinese now, you know. I want to change my citizenship, because I see this is truly a collaboration between the government, the insurance companies, and all the organizations. Really. And the way I think you guys tell it is also smartly done, because just like Malaysia, maybe Kelantan is a different way they look at things, Perlis look at it. So you went on stage and then you tailor make it there, So my question to you is, can a G2G agreement can be done in this?
I'm not so sure what you mean G2.
That means government to government. See, now you guys got this whole concept right.
Okay.
And here our ministers and all these guys are all wondering what to do.
Very good question. Actually, I introduced this model to several countries, the government. Almost all of them, except one, Vietnam. They answered me, oh, you're a communism country, so we have different political environment. You are so strong at centralized, government power. But I said, okay, this kind of policy cannot apply to any country, right? So you need to understand your local healthcare environment, your healthcare system, income level, even insurance industry, then customize the policy or the scheme for your local. So yes, so as far as I know, when the head of Social Security Bureau of China joined some WHO meeting, he introduced this. And the year before last year, the Indonesia was held G20.
Yep.
Yeah, so someone from Chinese government introduced this model during the G20. I think it's a way. I don't think it could be replicated by any country, but every country, government, HCPs or NGOs need to start to think, and the insurance industry start to think about the solution. And that's the answer. And another add on to your previous question, that now in some country it's appeared that called life insurance early withdrawal. You have 5 million life insurance, but unfortunately you're diagnosed with cancer. You talk to your insurance company, I need 1 million of it to treat my cancer. Early withdrawal. Then I left 4 million left, to my kid. Yeah. Personally, I hate life insurance because it's all for my. It's not for me, right? So I don't buy any life insurance. I'm sorry, I don't have kids. So that's why I hate life insurance. But this kind
you can donate to National Cancer Society, brother.
This kind of innovative thinking of insurance could be applied to early withdrawal, right? So I need to treat my cancer. I need 1 million of it, even 2 million of it, right? So that's kind of, innovative thinking. Maybe probably the insurance industry could have in Malaysia to help patient.
I think you have now what I call a door that is National Cancer Society.
Yeah,
okay?
Exactly.
So this is where you might need to talk to them. Because this morning, while I was coming here, I think this phone is listening to me all the time. It pops up and it says that our minister, our health minister, has just said that account 2 in our EPF, okay, that means in our retirement funds, account 2, you can take the money to buy life insurance, medical plan. Yeah. Okay. So the medical insurance company who are listed in the Bursa, the share price is going to go up. But anyway, so that is part and parcel of what the government is doing. But I don't think it's covering everybody.
Exactly.
It's just covering a group of people. So but anyway, so I think this is something that a G2G kind of initiative should be done. Dato', I sent a message to my friend Chitra sitting here, and I say this Dato' has such a big dream. It's a huge dream, because I'm in the tech world. Okay, so I can understand, what you're trying to do, and it's Such a big dream. So tell us, what do you think will be your one biggest challenge doing this?
Biggest challenge would be to get all of the stakeholders to sit together. They all have a common goal actually, but the method of how they go about achieving those goals are different, right? So it's all about putting aside the egos of everyone, the big E outside, and coming together for the similar goal and trying to find a path. You don't have to do it the same way, but address the goals, right? So your method can be different. So our proposal is we provide the rails, next an enabler platform, right? We don't dismiss anybody in the ecosystem. We just connect everybody to the ecosystem. So like, was it Aiden Insurance just now, financing that was actually saying they provide financing for a certain kind of treatment. So for example, you just imagine you have a platform that connects all sorts of facilities, the insurance, the flexi home selling, whatever not, all onto the platform. But there is a KYC at the back that actually analyzes everybody's data and push it to the right product, right? So you have the M40 folks that could probably afford to pay for some of these small micro insurance specifically for certain things, right? And you also have the zakat system and the wakaf system and the endowment that is available. So now it's about coming together and think about how do I actually optimize the channeling to achieve a certain objective. So for example, you know, for zakat, right? So for all Muslims, we pay our zakat, and a certain percentage of that is given back to us to decide who we want to give it to. Of course, they fall under certain category. And settling debts and payment for healthcare is one of the areas that we are allowed to use the money for. So can you imagine individuals can also come to the platform and contribute, right? And this fund grows because I see a dashboard to know out of how much I contribute, these are the number of people that have received diagnosis, received treatment, facilitation in terms of medicine, whatever, right? But the idea is, how do we get all of these people to come together? So you need a big taiko lah. You know, itu taiko yang hold the cane
the muscles,
mesti ada muscle.
yeah.
People like just me alone having this idea, I think not. I mean, it's not. Everybody will have this idea, right? But how do we make sure everybody comes together? So that's why I said the pilot is very important.
Yeah. So I think you are spot on, you know, because there are so many moving parts now in this game that you're playing, you know, and in this so many moving parts, everybody got their own interest, okay, and then like you rightfully say, they have to let go of this ego, you know, and then putting all these people together in one table and trying to do this, it's definitely going to be. I pray for you, okay. I really pray for you because your solution is.
We pray for Dr. Murali because the champion is.
He's the champion. He's sitting down there. Okay. Yeah, he's sitting down there. Yeah, because to get all these people to one table and sit and talk about it and use your platform so that it benefits everyone, I think, you know, tabe for you. Okay. And what are you doing? Can support where you got people like Grab getting involved. You got people like Malaysian Airlines getting involved. You getting people like railway guys getting involved, where you assist the younger children and elder people to come on board. Who others are you looking for in this CAN support to assist you?
Okay, I think CAN support have many components. So for transportation, of course, as many as like bus providers, any service providers, as long as it's transportation, I think that helps. Because if you look into Malaysia landscape, there are areas that there's no KTM, there's no Malaysia Airline there. So the only service that is available is bus. So we are looking at like bus providers to be our partners. So we are looking at other car kind of transportation, not Grab. That is a bit more rural area. So in Sabah and Sarawak, I think there's a lot more what you call as pick up. So if any individuals who are willing to be the partner of this can register and be in the system. So I'm not limiting it to a main big companies. Any individuals like we have, if Lion Hope Brigade is here, they are part of our partners at the moment to transport patients coming from Kulim to Hospital Pulau Pinang, just because Grab not able to cover that area. Because again, all these main companies, they are on demand. You have to request for them. They have to have a supply there. So by we having a community there, be with us, will help filling this gap.
Yeah. So transportation is one of the
One
things.
of it, yes.
Is there anything else that you can put in can support so that enhances this thing? Yeah.
Definitely can. Like I know there's a lot of like NGOs do mental health support. We have dietitian support. So those, whoever, all these providers can be part of us, and everyone, when patients or caregivers apply for services, we can link them up straight away to the nearest service providers.
Okay, good.
Yes.
So you other than transportation, you would need that. Now with ESG and everything else, I think companies should actually get their company staff to volunteer in this. And it's something that we can think about. Okay, so let's get to the audience now. Okay, so you can please ask any questions. Direct your question. Mention who you're asking. Before that, just mention your name, where you come from. So that the speakers also can address you personally. Any questions? The mic is here. This is Malaysia lah. Right there, Ibu. Okay. Oh, wait, get the mic. Get the mic. We can't hear you from here. Yeah. Cool. So after her, please. The next person. Yeah, get ready. Yes. Shoot.
Hello.
Yep.
I'm Ida from private sector. I have two questions actually. One question for the Dato. From your framework, is only dedicated for the services for treatments for cancer is only in MOH service, or is together in the private sector as well? My second is, so in a private sector, I work in a cancer center. So it's like lately we're facing a lot of funny questions from the insurance itself. They're like questioning the doctor's justification in treating their patients. It's like, instead of the doctor need to answer every single patient, they can do other things rather than answering these questions. And it's like frustrated for them as well. So yeah, and some after the doctors answer the questions, and then the reply from the insurer is rejected.
Okay, so the first question is to Dato'. The second question is to who?
To anyone that can answer.
Oh, okay.
Insurance.
Since you mentioned insurance, we ask Anish to answer that. Okay, Dato', over to you first.
Okay, so I think the what I said, the platform is supposed to be an enabler. So we should be able to connect to whoever that is providing treatment or diagnosis or even screening facilities on the platform. So if you're a private organization offering that service, we should also be able to connect to you, right? So it's any channel that's provided, right? So that's mine. So I leave the difficult question to the insurer.
Anish, over to you.
It's not a difficult question, actually.
Yeah, okay, go.
So I think you would have heard Dr. Murali talking a bit earlier about the state of healthcare in Malaysia at the moment. So if I had to summarize it quickly, what is happening in healthcare in Malaysia is we see high medical inflation. We see, just for everyone out there, it can just be any person, whether you are in the M40, B40, whatever. If you want healthcare, it seems to be more and more expensive. And so what's happening, because it's so expensive, you see insurers who are having to bear the brunt of this higher costs. So the thing is, insurers, as with everyone else, they're in the business to make money. So what you're starting to see is some insurers are no longer making money. In fact, many insurers will no longer be making money, especially in healthcare. They're starting to make losses. And so it's difficult for them to now go and increase the price, because then it has a knock-on impact on people across, just the general public. So if you have an insurer who's making a loss, what they can do is then go and increase the price. And then for you out there, it's a higher price, and it just makes it difficult for everyone. So it's a bit of a vicious cycle. So what they are trying to do is find other ways to see where there are leakages. Like Dr. Murali was talking about, if you there's maybe not much wrong with you, but you got your medical card, and then the hospital will say,
Stay for a day.
Yeah, stay for a day. So it's not necessary. And then if you don't do that, maybe the cost can be, 60, 70% lower. So that all has a knock-on impact. So if the cost is lower, then of course the premium that's charged to the public out there can also be lower. So those questions are there, but the reason that they're there is because insurers are also trying to mitigate costs, manage costs, because it is around about impact across the the entire public sector. So that's what it is that they're trying to do. I know it can be frustrating, and I don't know why that particular insurer would have rejected the claim, but
Jonathan, you want
that's
to
the reason for it.
Jonathan want to top up, yeah.
Yeah, because I think what I want to add on is where calcis comes in is when patients become uninsured. But we always look at the reason, why does it happen? And actually, what we found out, looking from the outside perspective is that actually many of these policies were bought decades ago, first of all. Decades ago, cancer was not the #1 killer of Malaysians, because we were still a young nation. So what really killed you then was heart diseases. So you price around open heart surgery. At that time, maybe 100K would not be suffice. Road accidents and all that stuff. But now Malaysia is moving into being an aging population. So if you survive through your heart diseases and from an actual perspective, you survive through that, cancer is waiting for you. And the problem is that you're seeing, not to say it's a bad thing, but the thing is that next, how do you then go and mitigate that is through early screening. Because a lot of these things are preventable, can be picked up. So what Rich is doing, at least looking at lung cancer, you have a gradual step up from AICXR to LDCT and all of that. Same thing with breast cancer, you can do mammograms. Colorectal cancer, we're not there yet. FOBT is available, it's cheap, but we're not seeing that happening, even with colonoscopy as a first way of preventing colon cancer. That if you remove your polyps, you have no real reason to have colorectal cancer. So that's not happening at the moment. So what we need to do is really understand that there are limits to insurance policies today. You just cannot, and as population ages, they've got more and more claims experience. And as a result, to balance back the risk pool, you have to charge people more of the premiums. So it's a vicious cycle, and the only way to break that really is to look at screening, especially for the seniors. So imagine trying to get your parents to go screening. It's like vomiting blood sometimes. Like I try to, even for me, I tell them, go get your dengue vaccine. It's cheap, compared to the cost of being stuck in ICU and HDU, for a few days on the verge of dying. Do that, but it's so hard convincing them. So you imagine now, what we have to do really is look at prevention is better than the cure itself, especially for an aging population.
I totally agree with you, and that's why I think all of us should give a round of applause to National Cancer Society and Dr. Murali, who are ahead of this game, where they are talking about all this. Second question. Yes, gentleman there. Can we pass the mic to him? Are you from Maldives? No.
Hi, good afternoon. I'm Sivaraj. I'm from Center for Health Economic Research in NIH. So the team is here. It's very interesting because part of the study that we did was actually on the hidden cause of cancer. And we also did the evaluation of financial incentives programs in Malaysia. One of the things that we found out, for example, is that there are multiple programs that are available. This is the first time I'm hearing about Can Support, which we should have evaluated also, but we never knew earlier. So what we found out is that there are multiple programs, including state-level programs that can assist patients. So for example, that there are some assistance in terms of medical aid and so on. But the issue is, like the solution, like what Dato is planning, is the solution that we are seeing is that there's no single platform where all of these solutions are integrated. And I think you have asked the questions, what's the challenge? But I'm still going to ask back the same question. How come that we all have the same aim and same objective, but we have not consolidated this at one single level? And the other question would be that what is the role of Ministry of Health in helping consolidating this initiative into a single platform? Because we even have like PKB40, which helps with the transport for the patients. But again, we are all finding different solutions to the same problem. So from your perspective especially, how MOH can help in consolidating these initiatives?
What is your name? Siva.
Siva, yeah.
Siva, so you're asking Dato the question. So before Dato asks the question, I'm just giving on my fly here, you know. We all have to wait for one huge catastrophe, then everybody will get together. Okay? Before then, all will be doing your own stuff. Okay? But anyway, Dato, you can answer.
I think thank you for the question. I think if you recall in one of my slides, I did mention that what's important here, it's not the tech. The tech is actually who's in tech now, we know that. This is the easiest thing. You have everything. You can get ChatGPT to do system for you nowadays. So you don't even need human anymore to a certain extent. But the difficult part is actually on the governance part, right? So there must be real thinking at the back to actually say, how are we going to close this gap now? So in every solution, right, there's always this short-term solution that we have to do. And there's always this closing the gap for an interim, and then the short-term, mid-term, and then the long-term. We envision a future where all of this will be on the platform, right? So there'll be no single Malaysian left out to get any kind of medical treatment that they want. That's the vision. But to get there, we first have to bite it bit by bit. First of all, like what you said, I'm sure you've done your research, you know that every state have got their own assistants, right? The medical assistants. And state don't report to the federal, right? Just talk about the zakat thing. You can't talk to federal for Selangor zakat, you know. Hey, my zakat is my zakat, how I want to do it. So it's unique in every state in itself. So the China way of doing it is something that we can probably emulate, right? Agreed. So the MOH can come up with a framework. This is a framework that we want, right? Now, you've got to take it and localize it. So start with a state who's a bit more digital ready, a bit gung-ho, MB.
Like Selangor.
Something that who are already ready. Don't talk to a state yang tak ada e-services pun tak ada, then you become difficult, right? So you go to somewhere where they have all of this being given, like Selangor, they give a lot of benefits for the Selangorians. So now what we have to do is to actually say, okay, now we have a federal level framework. Now we want to try a pilot in a state, because you cannot do this at federal level, because then you will miss out all the state benefits that comes with it. So you got to go to state and then localize a state requirement. So what comes from federal that goes across everybody, then you have the state level, then you have also in every state they've got all the foundation, the NGOs that registered in that. So you've
all
got
the stakeholders,
all the stakeholders, and tell them first, we've got to have like a pool, like, you know, what do you have first? And put this, made it available. Now, after the pool is available, then we'll just say, let's call the insurance companies in, let's call the endowment guys, now sit down and say, all this benefit, if we pull it together, what can we offer? Right? So that is, because if you take just by individual, I subscribe, let's say for example, RM2 a day, you know, like what Grab is having, right? So if I'm a gig worker, I subscribe to it. I'm talking from the perspective of an employer. We are in the digital world. 40% of our workforce are actually gig workers, right? So when they are gig workers, they cannot be covered under the medical scheme and the insurance, right? So we try and be creative and say, hey, what if we subscribe like 1% of their salary per day to insurance company? Then insurance company will say, hey, we don't have this type of insurance. Hey, you're not big enough for us to design something like this. But if we put it in a pool, then probably it works. Now, the idea can be like a koperasi of, I don't know, we can create like a Koperasi Kesihatan Malaysia. right? So everybody pays 100 ringgit for lifetime subscription. How many workforce we have? About 6 million something for PEPF data, right? So if someone pays 100 ringgit, that's how much fund we have.
Correct.
From that fund, we start something. Then we bring in all the other agencies, right? So it's like how Bank Rakyat started. So now Bank Rakyat is a bank.
Yeah.
So now you imagine this Koperasi Kesihatan Malaysia
Becomes
it's a big thing that provides health gap services to the people. Now then you have to talk about the facility, right? So because like Dr. Murali said just now, there's also a problem in the facility in itself. Right? So then the Koperasi can own facilities or can collaborate with facilities that have these services, and then all of this will be on a platform. Right? So the idea is, most of the time, if you ask these people, they don't even know. Right? There are facilities around. There are help to be offered. They don't know.
Like him, he didn't even know Ken support is there.
Yeah.
Yeah.
So
yeah.
the idea is to first put everything together. And all this integrated effort, whoever can claim their glory, whatever you have done, it's up to you. But we just want to put it on a single rail track.
Yeah.
Right? So, and Johor will stop at Johor and have Johor's version, Selangor
agree.
version, whatever.
Shiva, basically she's saying you need to look for a rainmaker. Okay? Somebody who can bring everybody together. Yeah. What's the next question?
Joe, maybe I can add
okay,
on.
sure.
Because we are facing this also on our end, and I'll tell you how we're solving this. You must look at this. What you have is information store. What you effectively is an information store, and we have to actually overcome this paradigm, all of us, where we always believe that you create a portal, whether an app, website, doesn't matter, or book, that has all this relevant information, and you think that people will come and look for you. Doesn't work anymore. So what we're doing is that we're flipping that on its head, where information searches for a relevant person. That's what you want. We're going to implement this next month, and this is using TikTok. So the idea is that because we realize that, for example, we're trying to support adult caregivers who are the medical advocate liaisons for the elderly parents battling cancer. They are not healthcare professionals, their health literacy is not so great. They want to know, what can I do that's actionable? So the idea is to create short, actionable TikTok videos that will help them. Now, the beauty of these videos is that the algorithm finds these people. So if you can rethink your information, the way you want to structure information, whether at federal, state, or community level, what Datuk said, then the algo will go and find them. So you don't have to keep pumping money. You just do it once, and so it's less costly, more effective, as it were, because then there's a huge penetration of TikTok subscribers in Malaysia, but they are in between 25 and 45 range. So you must also choose your target audience, lah.
Yep. Wonderful. Time now is going to be 1:30 now. What time am I going to stop? Supposed to be half an hour ago, I know. Okay, one last question before we end the session. One last question. Yep. One last question. Yeah, okay, go ahead. Your name has been mentioned, your company's name was also on the slides. So please say a few words, yeah.
Thank you, sir. Now with the challenges currently with the insurance policies, claims, etc., right? Would insurance companies be open in collaborating with Emden Capital, of an institution such as Emden Capital that provides medical financing for bridging, for shortfall, for co-payment, right? And Dato', would Tata Edge be the enabler for this? So all insurance companies perhaps go through your platform and you come to us with that, what is needed. And the third question is, what are the challenges you see if insurance companies are okay with that, and you as enabler, you are able to do this?
Okay, so you had first question insurance, second question Dato', third question insurance, okay?
Third question,
something to,
challenges.
yeah. So since you mentioned insurance, only one insurance ruler here.
Of course.
So
You see,
let him.
he seemed to be very loved, no, Pak Jo.
Ganesh, over to you, brother.
I do love Joe. I've known him for a while. I think insurers will definitely be interested in collaborating because a lot of them, in mitigating some of the risks, what they have done is exactly what you said, where they implement these co-pay, deductible options. So there's always this gap. So you buy health insurance, but now as a policyholder, there is this gap for you now. Right. So it definitely makes sense to try to collaborate with other players to try and find different solutions to solve these problems. Like I said, it's not about the price anymore. You can't increase the price to the extent that you want to continue to make profit. So you have to find other ways to find solutions and to reduce costs and to make it a lot more sustainable for people out there now. So definitely they will be.
So that means the differential amount is financed by a third party.
It's of course it's possible. I say insurance will definitely like that type of innovation because they have to find solutions. So it's definitely something that we can look at.
I think you guys can have lunch together later. Sit together. So Dato, yeah.
Okay, yeah. So like I said earlier, we behave like an enabler. So we just put everybody from the ecosystem together. So the challenges, so which means you can be part of the system, insurance company can be part of the system. But the real challenge, what is the challenge of doing this, is probably the eKYC part, right? So because we want to channel the right target audience to the right solution, like what Jonathan said earlier, you push the right solution to the right party, right? So when that eKYC part needs to be done, we need data. And the data will probably need to come from LHDN, EPF, hospital medical data, and then there's another role, which is a medical part that actually confirms that, yes, this is correct. Because right now, like the lady mentioned earlier, that the doctors have to verify their own statement of like, this is why I want to prescribe this kind of treatment, right? So I'm imagining like an NGO kind of a version that actually validates this doctor's diagnosis or treatment solution. And that can be, either something like NCCM or someone that actually says, yeah, we validate, this is correct. And this can be done at a later stage. You add AI to it, and you all of this can be validated through system. So the challenge is really to get all the stakeholders to be able to provide the data, and then comes back to that gentleman's question earlier, what is the role of MOH? We believe this is the role, right? To get everybody to come together and share the data. Government's framework already have that. They have this integration layer that should be open to everyone and all that. But the main challenge is always to get all of these agencies to come together to work. Yeah.
Okay. Bro, I will introduce the president of the Life Insurance Association of Malaysia. Maybe you can talk to this guy, Mark Odell, but individual insurance companies can't. Okay, we're going to end the session. One last word from each of these panels here, okay? Yes, ladies first. You so lady, but this one, didn't give her first now. Okay. Okay. Okay, yes. Dayang, one last word.
I think to bridging all this gap in cancer care, like I applaud what Dato' said, collaborations, coming together is important. Yes, like Mr. Siva, right, said that we have a lot of this solution everywhere in this one word. So sorry, it goes too long.
Yeah, that's okay.
It's all about coming together. I know your product, like let's come and collaborate. It's collaboration together.
Yeah, good. Thank you very much. Dato', one last word. Yeah.
I would say sanitization of intent.
Sanitization of intent.
So semua orang ada niat baik.
Betul.
The intent is all the same.
Betul.
But now you need to sanitize it.
Wow, I learned something.
Take the gist of it and then put the ego outside, come in to talk about the real intent. Right? So
very nicely said. I'll go home today with that word. Sanitizing intent, fantastic. Yes, Alex, he arrived today. Oh, yesterday from China. Yesterday. Oh, yesterday. And I hope you don't mind telling him, his father is not well. But yet, he made a decision to come yesterday, come here, and he was so excited about sharing what, what in China they are doing, So let's give him another round of applause, okay?
Thank you.
Yeah. So Alex,
Thank you,
one
Pak Jo.
yeah.
So I think, okay. I think National Cancer Society would play a very critical role in current stage to integrate all those kind of solutions, existing solutions or potential solutions, then discuss with, scientific area, government, every stakeholders to organize it, to make it happen to help Malaysian patient. Yes.
Thank you. I'm really proud of what's happening in China. My mother told me to go to a Mandarin school. I didn't go. I should have gone. Okay, Anish, over to you.
What I've really enjoyed seeing today is some of the solutions coming and how this all relates to cancer and these types of things. So, and one of the things that we've been talking about for a while is this concept of prevention and screening and diagnosis and all of those things. And it's nice to see everyone was talking about it and how important it is to all of us in improving, what is it am I improving? Yes, in making people's lives better. Yeah. That's what I want to do.
Okay, good.
So yeah, that's been great. Thank you for having me.
Thank you, Anish. Yes, Jonathan. Yep. Well, no, I told Jonathan I don't like this guy. He said, "Why?" He said, "You're taller than me, brother. That's why I don't like you." Okay, anyway.
But that's why I dress in black, so you can dress in red.
That's right.
Our colors, by the way. No, I think I look at the audience. You're all so young here, and I just want to leave you with these words: there is hope for Malaysia.
Woohoo! Yeah.
There is hope.
Yeah.
I mean, it's not my words. I'm hearing it from so many people that are coming, that are contributing solutions and expertise and innovation. This room is just not just the start. I can tell you from the capital market side, from what I'm seeing, there are a lot of Wakaf innovations coming, and it's coming next year.
Yeah.
You'll be surprised like how innovative Malaysians are when they put their hearts to it. And I think when I just see everything that's in play, it's going to be implemented. Not talking about dreams.
Concept.
Going to be implemented with a timeline. My goodness, we are no longer alone. We feel like we're going to be part of something really big that collectively, wow, I think we can really raise our hands and say Malaysia Boleh in a very good way. So there's hope, guys.
Yeah. Thank you very much. Yeah.
Hey.
With that, thanks again. I mean, without you guys, we will be talking among ourselves. So thank you very much. You are here today. Before you end, Doctor, can get a photographer to take a photograph of five
Okay,
of us.
so before we end, thank you, Pak Jo, and our esteemed panelists for giving such an insightful discussion. We are going to, before we go for our long-awaited lunch, we are going to be presenting a token of appreciation for all our speakers. So can we have Dr. Murali to go up on stage to present? Okay, maybe one by one first. Could we have Pak Jo first? Okay, so for Pak Jo first. Next would be Mr. Jonathan Teo. Next would be Mr. Alex. Subsequently, Datuk Nuraslina. Then we have Mr. Anesh. Last but not least, Miss Dayang. Okay, then can we have all the esteemed speakers to line up together for a group photo? Okay, thank you everybody. Let's give them a round of applause. Thank you so much for being here. Okay, so now we're going to move on for lunch. Lunch will be at the observational deck. You can follow the